Amateur economists and analysts are fond of sounding the alarm over the prospect of a recession. After the Great Recession of the 2000s, the COVID-19 recession came a decade later and was one of the shortest in history. As recessions continue to occur, investors are more eager than ever to ensure they lose as little as possible if one hits. Hello everyone and welcome back to the Finance Guardian channel. Traditionally, investors held a portion of their portfolios in precious metals such as gold. During periods of economic downturns, this can provide a hedge against stock losses. This old-school capital preservation method has been proven effective and still is, but a new alternative is challenging it. Investors are developing an interest in Bitcoin because it has been around long enough to acquire a lot of recognition and support, and it's even showing some trends. Maybe it's time to end the long and winding debate between Bitcoin and gold. Hit that subscribe button and the bell beside it, and let's get started. Here's a quick overview of Bitcoin. Launched in 2009, Bitcoin's decentralized technology ushered in a new era in investing and finance. Initially, these digital currencies were only appealing to a limited group of enthusiasts. Early Bitcoin speculators discovered in 2010 that the fractions of a cent they had previously invested in had grown to 9 cents per Bitcoin. Large-scale Bitcoin mining farms and pools have become increasingly popular, and cryptocurrency exchanges have popped up. As the COVID-19 pandemic began to paralyze economies across the globe in 2020, investors and speculators noticed that Bitcoin's value didn't fall alongside stock values. As capital poured into it, institutional investors sought ways to create investment instruments and funds from it. Its price continued to rise, and by April of 2021, Bitcoin was worth $61,000. A quick overview of gold. In the past, gold has performed well during market corrections because it maintains its value. The price of gold remains fairly stable before rising if investors move from stocks to gold when a recession threatens. This makes it a useful hedge against market corrections or recessions, as it moves in contrast to another investment. Not all investors turned to Bitcoin during the COVID-19 pandemic. Many opted for traditional strategies and shifted toward gold. Because of this, gold's price soared from just below $1,300 in late 2019 to nearly $2,100 in mid-2020. Despite its decline through 2021 as the economy slowly recovered, its price remained above pre-pandemic recession levels on average. Because gold does not pay interest or dividends, some may question if it is a worthwhile investment. While this may be seen as a disadvantage, the point of gold isn't income, Carter says. It is to preserve wealth during times of uncertainty. Ultimately, experts believe that gold plays a vital part in the stability of your portfolio as a buy and hold investment if you're searching for a safe haven asset that is negatively linked to other assets. It also serves as a capital preserver, inflation hedge, and diversifier. All of these advantages have the potential to provide favorable returns over time. Bitcoin versus gold. Investors are concerned that the value of their money may depreciate as inflationary pressures increase. Holding gold in your portfolio is one method to safeguard your purchasing power, but cryptocurrency is an alternative asset class that has exploded in popularity in recent years. As institutional and retail investors alike pour money into Bitcoin, you may be wondering whether this new digital asset belongs in your portfolio or if you should stay with something more traditional like gold. Ray Dalio, the founder of Bridgewater Associates, views Bitcoin as gold's digital equivalent, although he clearly values one over the other. Dalio says, "If you put a gun to my head and said I can only have one, I would choose gold." After years of expressing concerns over cryptocurrencies, Dalio publicly announced that he owned undisclosed amounts of Bitcoin back in May of 2021. Still, he isn't totally sold on the idea. "I own a very small amount of Bitcoin. I'm not a big owner. There are certain assets that you want to own to diversify the portfolio, and Bitcoin is something like digital gold," Dalio tells CNBC's Make It. According to Dalio himself, Bitcoin can also help hedge against inflation. But as I mentioned earlier, if he had to choose between gold and Bitcoin, he says he would choose gold for the long history it has as a storehold of wealth, which is a physical asset that can be held and converted into money at a relatively similar rate as its purchase price. Could Bitcoin be the new gold? Two of the world's leading gold authorities disagree, but the rise of cryptocurrency has become a phenomenon they can't help but acknowledge. To date, Bitcoin has outperformed gold considerably, with the digital coin up nearly 133% and the yellow metal down about 4%. In light of the divergence, investors may be weighing Bitcoin versus gold as a hedge against rising inflation, but the strategist behind the world's largest gold-backed ETFs thinks otherwise. George Milling Stanley, chief gold strategist for Spider SPDR ETFs at State Street, told CNBC's ETF Edge, "I think it is possible for these two assets to coexist quite happily in the market because they do completely different jobs." The SPDR Gold Trust, GLD, the world's biggest ETF backed by physical gold, entered its 17th year on public markets last November 18. There is a decline of 4.5% in 2021 and an increase of around 281% since its launch in 2004. The historical promise of gold has always been twofold. One, that over the long run, and I stress this, over the long run, gold can help to increase your returns while also helping to reduce your volatility. Unlike gold, which has a track record of improving risk-adjusted returns over a longer time horizon, the holy grail of asset allocation, the strategist contends, digital coins, carry more risks, are more volatile, and are more subject to extreme short-term swings. This is why sustained inflation will likely bring gold back into favor. During sustained periods of high inflation, by which I mean many months without inflation exceeding 5% per year, gold is a very good preserver of purchasing power. During these kinds of periods, which we saw last in the 1970s, the gold price appreciated about 16% a year, and it gave a real return of about 11%. Concerns about steep regulations, or worse. Dalio believes that Bitcoin has a reasonable probability of being prohibited by the federal government. Almost 100 years ago, President Franklin Delano Roosevelt signed the Gold Reserve Act, transferring to the U.S. Treasury all gold titles and certificates which the country held privately. The United States was still on the gold standard at the time, and Roosevelt thought that weakening the currency would help the country emerge from the Great Depression. According to Dalio, any big economic collapse or inflationary catastrophe might drive federal governments throughout the world to take similar measures on Bitcoin and other cryptocurrencies. Dalio is not the only one who feels this way. Jerome Powell, the chairman of the Federal Reserve, isn't a fan of cryptocurrencies either, referring to them as quote-unquote vehicles for speculation. Powell also made a comparison between cryptocurrencies and gold, saying that people have long given gold a quote-unquote special value that it doesn't have. Many financial professionals have cautioned about the volatility of cryptocurrencies in recent months and years, advising consumers to only invest money they can afford to lose. Bitcoin is simply a minor part of Dalio's bigger investing problem. He replies, "I just think of it as a diversification. By and large, I don't really know whether Bitcoin is going to go up or down. I could argue both sides of that. The trick," he adds, "is to assess such investments on a regular basis and to avoid buying more of an asset like Bitcoin just because it's performing well right now. Be careful what you're putting your money in," he advises, "and make the diversification global, not just in the United States." Should you invest in gold or Bitcoin? With all of that being said, it's time to decide which of the two is a better investment. The more we progress towards a paperless world and digital currencies become more popular, the more rational it is to evaluate whether a new asset class like Bitcoin is worth investing in. At the same time, gold has proven merits that should not be overlooked. Due to gold's price stability, you don't have to trade it unless you want to change your investment strategy. Investing in Bitcoin, on the other hand, may demand a more unique approach. Since Bitcoin is such a volatile asset, you should prepare an exit and entry plan in case price swings become a concern. When the value of Bitcoin rises to your advantage, it is important to decide when and if you want to cash out. If you're unsure whether to invest in gold or Bitcoin, Carter says it all depends on your investment goals. The case for Bitcoin is speculative given that it doesn't have much utility yet. And that is all the time that we have today, folks. Which do you prefer, gold or Bitcoin? Let us know in the comments section below. And we hope you enjoyed this video, and if you did, please remember to hit that like button. If you're new around here, welcome, and subscribe to our channel, and on your way out, please do remember to click on that bell icon too so you can remain updated about all of our future videos. You're welcome to the channel where you will learn the basics of personal finance in easy to understand language. We'll see you next time.